We have a generational opportunity to buy equities right now, and a lot of people are cautious because the market's hitting all-time highs, and we hear about AI stocks that are worth hundreds of billions of dollars right now that are selling, or that have gone up 2,000, 3,000, 4,000%. For example, like Sandisk, it's up 30 or 40x this year. We have AMD, which is a large company that's up 300 something percent. We have Nvda, which is the largest company in the world, up 80%. And people are cautious because right now Nvda announces earnings this week, and yeah, people are wondering if this can continue. They're naturally cautious because we always hear about the market. It's selling at all-time highs. We're selling at a high PE ratio. But Bill Ackman, one of the best investors of our time, just went on and explained why it's a great time to invest, why he still thinks now's a great time, and he gives some of his suggestions for someone that's just starting out. So let me play this for you. I'll give some of my thoughts as well, but I thought this was a great interview, and he is one of the best investors of our time. He has outpaced the broader market by 5x, even net of fees, since they started. So let's play this here.
But I think there's really never been a bad time to invest in Pershing Square, as long as you have a long-term horizon.
I want to get your market view because you're obviously deploying capital and putting money to work. Do you think the current market rally that we've been seeing is justified?
Yes.
Or do you think that stocks are due for a reality check?
I think it's justified.
Why?
I think the economy is going to be very strong. And I think the kind of second half of the year in particular. And part of that relates to just kind of policy, right? We have a tax bill that's going to be very pro investment. We have a president that's made deals with lots of different countries using tariffs and other levers to get them to commit to open factories here. We have a massive AI infrastructure build out. We have a massive energy infrastructure build up. All of these things are pro economy. And then AI itself is this very powerful productivity force. Every company today is trying to figure out how to use AI to enhance their business. And so there's a very large, enormous tailwind. And when you look at the S&P 500 and you say, oh, it looks expensive historically, you have to look at the composition of the companies. Today we have some of the biggest companies in the world growing at the fastest rate. Usually in the old days, only small companies could grow as fast as some of the biggest companies in the world today. And that's a very significant difference in terms of the composition of the index. So I think index funds are great. Yeah. I think they will likely continue to do a good job.
So just to break that down, people oftentimes look at the S&P 500 and they say, well, it's at a 22 forward price to earnings ratio or a 21. Historically, that's been a pretty bad time to invest. You get inferior returns. There's not much meat left on the bone. But you look at these companies, like let's look at Nvda, right? Everyone knows Nvda. It's the largest weighting in the S&P 500, 7.5% of the S&P 500, and it's growing revenue by 65%. Let's look at another one, Google, one of the top weightings between GOOG and GOOGL, second largest company in the world. It's growing revenue at 15%. Okay, it's growing net income by 32%. Okay, what about AVGO, Broadcom? This is kind of a newer entrance into the top 10 because it's up over the last 1 year. It's up 81%. Now it's a $2 trillion business. Well, they just grew revenue at 23%, 24%. Net income just went up 300%. Okay, well, you start breaking that down. Like Microsoft is growing at 15%. Amazon's growing at 15%. Microsoft's right around there, 18%. Facebook, Meta is growing at 30% revenue growth. Tesla, pretty stagnant. Berkshire, a steady grower. But when you start looking at how this is broken down, we're much higher weighted to the largest tech companies in the world, and they're growing faster than ever before. This is even before we're seeing a lot of productivity gain and a lot of increase from the CapEx that we're seeing spent right now. So there's a reason why it's being priced higher, and I think Bill makes a good point there that these are just higher quality companies than we've seen in the past. Let's get to his forecast.
Been able to beat the market over a long time.
What's a position or theme that you don't think the market is fully appreciating?
Every company.
What could break this market?
I think we're beyond the place for an adverse outcome in Iran. I think getting that resolved that's really the one remaining overhang on the market. I think we resolve the war in Iran, energy prices start to come down, the Fed can get more constructive on lowering interest rates, and I think rates are really too high. I understand the Fed not wanting to lower rates at this moment because with energy, the problem with higher energy prices is it sort of bleeds out into other parts of the economy. Fertilizer costs affect the cost of food.
Yeah.
So I think that's kind of the one issue that needs to be resolved to have a real take off the market.
What level can oil be at and the market can continue to move higher?
That's probably the biggest risk for the economy.
Okay, just finally, your best advice for all of our audience, retail investors who are listening in. Maybe they missed out on the April rally. Maybe they are fully invested but thinking about where they want to put their cash to work.
My best advice is, one, start investing early because compounding is this incredible force, but you want to compound for as many years as possible. So start investing early. Take care of your health because if you live a long time, that's also another way to extend the Warren Buffett. One of the reasons why he has an amazing record is he's 95 years old, still just recently retired.
But still going to the office.
Certainly is still going to the office. And then also taking a longer term view. The market is moving more and more short term. A lot of professional investors, famous ones like Citadel, Millennium, are very short term oriented. Jane Street, these are profitable strategies. But I think the benefit an individual investor has is the ability to take a long term view.
This is something that I've talked about for a long time. This is great to talk about this week too because we have Nvda earnings, and a lot of Wall Street money is very focused on the next 2 weeks, 2 months, 6 months, not even 2 years. They're focused on the short term because they have people that they have to speak to, that they have to give their reports to, that they have to explain why they made certain decisions. And if investors start losing money, they start pulling money, and then the people on Wall Street that are running these funds make less money. So it's very important to think very short term for those investors. For us, we can invest in whoever's going to make us the most money over the next 5 years, 10 years, 20, 30, 40 years. So right now, we have a lot of companies that are they're trading at really interesting levels because they're growing so quickly, but people don't know whether to price in longer term growth, to price in a moat, whether it's even Broadcom, which is a 27 forward priced earnings, so not like cheap. It's more expensive than the market, but when you consider how quickly they're growing, it does sound kind of cheap, doesn't it? They're growing at double digits, 20% a year for the last 5 years. Over the last 10 years, they're growing 25%. That seems pretty cheap, doesn't it? And then Nvda, the largest company in the world, people are so worried about it, but it's priced at a 24 forward price to earnings ratio. Sndk, SanDisk, it's up something like 4,000% in the last 1 year. Yeah, 3,300. And it's a memory stock similar to Micron. This grew massively, but still only an 8 forward price to earnings ratio. So the market is looking at all of these AI stocks and pricing in their massive growth and how much money is being spent on them. But the market, I don't think, is really rewarding some of the winners like Amazon, like Meta, like Google. There's some of the largest companies in the world, but they're not moving up very much. People are looking at all the short-term winners from AI and not really pricing in the longer-term winners in my mind. So that's one of the reasons I've been adding a lot to these positions. I am still watching the other positions, the memory or the stocks that I was just talking about, the AI stock pure plays. But these are the ones that Wall Street just is not willing to buy right now because they're spending so much on CapEx. And you might say, well, obviously they're willing to buy. They're up 30%, right? Amazon's up 30%. Wall Street's buying them. Well, yeah, they bought them recently, but if you look over the last 5 years, Amazon is only up 64%, while their revenue has gone up over 100%, or just about 100%. So I still don't think, Amazon is as priced as it should be, priced as high. I don't think Meta is priced as high as it should be at a under 20 forward price to earnings ratio. Google, I think, is starting to get respect, but this was, down at, just 1 year ago, was down at $167. Now it's nearly $400, or it is $400. So this was one that I loaded up on a lot last year. It was my largest holding last year until this year when I passed it with Amazon by dumping in tons of money. So I still think you have this massive opportunity in front of you where you can buy, whether it's index funds that are, people are a little bit cautious. They're at all-time highs, but still, I think it's a great time to be buying index funds ahead of this massive AI boom. You can buy some of these major tech companies that I think provide a lot of value. And I went through for 15 minutes why I was buying Amzn the other day. So check back to that video, the first video on the stock channel. And I also go through Micron a little bit in that video. I made a video on my main channel talking about Amazon and giving some of the numbers behind it, giving my bullish thesis. I'm going to keep on talking about it, though, because I think Amazon's still a great opportunity now. So you have this opportunity where you can make great investment returns, but in a world of AI, where AI is getting smarter and smarter every year, there are going to be, I think, big opportunities in the future to make lots of money, but fewer of them. Like the option now, or the option to make a lot of money will still be there, but it'll be harder to do normal things and make money and significant amounts of money, because if someone figures out it's profitable, even if they don't want to do it themselves, they'll make an AI do it, they'll make a robot do it, and there will be businesses that there are opportunities in today that won't be there a couple of years from now. So this is also a major opportunity to make money before the world of AI, right? I heard someone say recently that the next few years are going to be very important for mining fiat, meaning basically for making money. Because in a world of AI, there are a lot less cracks where there's a lot less disjointedness. There's a lot less stupid opportunities. When you hear about someone that made a ton of money doing this one little thing that just seems like dumb, right? There are going to be less opportunities like that, I think, in the future. Now, I'm not saying that there aren't going to be opportunities in the future to make lots of money. I think our best years for money making are in front of us. But again, things just become more efficient. Just like with the internet, things got a little bit more joined together and there are less cracks. Like now real estate, sure, it might be broken up a little bit, but largely, you can go research different real estate markets across the country, and you couldn't really do that 40, 50 years ago. Not very easily, at least, right? So now it's just much easier, I think, in a world of AI. Like I'm already using AI to scan every listing in my area every day, and that's going to be more and more prevalent. So those types of things are it's going to be harder to find an edge. Let me know your thoughts though underneath the video. This is a great opportunity still in front of us. The market's thinking short term, but you and I can think long term. Let me know your thoughts underneath the video. I really do appreciate it. If you want to check out any of the links, they're underneath. I'm not sure which channel I'm posting this to yet, but we'll see you in the next one. Bye. Just a reminder, this is not financial advice. This is not legal advice. Do your own research. I'm never going to reach out to you either in the comment section or through any other means to try to get you to invest in something that I'm investing in or to send me crypto. Some links underneath the video are affiliate links. I may earn a commission, but this is at no extra cost to you. Of course, do your own due diligence.